Michael, just to begin with that ratio of cash to credit sales and the movements that we have seen in the two, for how long, first of all, what is this indicative of the fact that things are really tough out there, the fact that more of your clients are buying on credit than using cash? And for how long do you expect this to be the order of the day?
No, hi, Fifi. No, since for the last 30, 40 years, Truworths has always been a credit-orientated retailer. So if I look at the percentage of credit to total in the Truworths African business, it's hardly changed over the years. It's always been credit-orientated, and we want it to be like that.
All right, and speak specifically in an environment where you do have more and more people coming out of or losing their jobs. You've got an economy here in South Africa and certainly in the UK that's also not as strong as it should be. Are you not concerned then that if in an environment whereby your cash sales are declining, it could pose a material risk for the group?
We don't enjoy the idea that cash sales are declining, and that is a reality of the country, that people do not have cash. Our business model is a credit business model, so we are dependent on credit.
I do hear you, but I imagine that credit would need to be repaid back at some time, some moment in time. And of course, we have been put on hold. There, we're back again. Michael, thanks so much for your time, because yes, credit-based, but I'm just speaking about an environment in which we know is macroeconomically challenged. The ability of your consumers who do buy on credit today to pay back with cash tomorrow, are you not worried in this environment that we might be in a situation where we might have to write off or impair more of that debtors book as a result of those consumers not being in the financial position to pay?
You know, Fifi, we as a country are a credit society, so banks, businesses like ours are all completely set up to operate on credit. Therefore, we have very, very sophisticated systems and processes to be able to manage the risk. And there's also a lot of legislation that protects the consumer and forces us to make sure that people are credit worthy and that we do not give them more credit than they can afford, because you're right, the consequences of too much credit means we'll suffer bad debt, and it's also bad for the economy. But just to give you an illustration, we have about 2 million applicants for credit a year. We only approve about 25% of them. 75% we reject because they do not have adequate credit. And even then, only about 2/3 of those that we approve actually come in and operate credit. So there's a lot of protection against bad debt default built into the system.
All right, Michael, you are guiding for tough times to be the order of the day, at least for the foreseeable future. I'm just interested in some of your plans to mitigate against those headwinds and where you are seeing opportunities for growth and increasing value. I couldn't help but notice just how well your Kids Emporium business is doing against, for instance, ladies' fashion and men's fashion. And I'm wondering if there are plans in the group to perhaps invest more in this area.
Yeah, that's a very good observation, because in these tough times, it is an interesting comment you made, because our ladies and men's businesses are basically square on last year. Our opportunity in the last 12 months was kids. We grew our kids business significantly, and it is by far the better part of our business. Interesting to note, however, that kids' product is not cheap. It's quite expensive, and it's better end, high quality. We have Nachi, Earthchild, LTD Kids, very good brands, and yet they do particularly well because people will rather prefer to buy clothing for their children than themselves if necessary. So that is an opportunity. We also do a lot of technology things. We have lay-bys in our stores to help customers, and as I've said, credit, and we do e-commerce. So there's a lot of things we do to try and mitigate against the tough economy.
And Michael, just in terms of a strategy, we have seen a couple of boardroom changes in the retail sector. We've seen new appointments of a CEO from Massmart, also coming from Woolworths. You have fended off a lot of criticism for your tenure there at Truworths, and I'm interested if we should expect any changes in the CEO role from Truworths in the foreseeable future. How long are you planning on staying?
Yes, look, you make a good point. I've been doing it for over 30 years. I'm still energized, young, I feel, in heart, if not in age. But the truth is we have a succession plan very inbred in our business. There are successors or potential successors in place. And I'm continuing to play the CEO role as long as I want to and enjoy it, and as long as, most importantly, the board and shareholders want me to. And I'm guessing in the next year or two, we'll make a change in the corporate structure, because that can't carry on for much longer.